Hello traders and welcome to another video review. Today is Tuesday, 27th of the October 2020. Today we are going to take a look at the Forex market and the first thing we are going to do is, of course, to see if there are any interesting events on the Forex market, and then of course we will do some technical analysis. So bear with me for this few moments and we will just see if there is anything interesting for the Forex traders on the market. So let's just swipe down towards today's date, and as you can see here we got some speech 4:30 in the morning from the Reserve Bank of Australia Deputy Governor Guy Debble, and it didn't actually did anything in particular. As you can see, there were some other speeches. There's Marshall Bullock spoke as well, and the Assistant Governor Michelle Bullock spoke again at 9:30. So, well, it might be kind of interesting to see what is going on the Aussie. So we are going to do some analysis of the Aussie dollar and against American dollar, of course. Yeah. 10 o'clock, unemployment rate data to be released for the third quarter from Spain this time. And as you can see here, we have bad news because the unemployment rate is increasing from 15.3% to 16%, and that's not very good sign for the Spain, because as we know the unemployment rate there has always been high, at least for the last like 10 years, and the unemployment rate among young people that are before or after the graduation is really high. It's like 40 or 50% right now. So if this unemployment rate is rising in a third quarter, it's not a good sign for the euro at all. Money supply and the private sector credit data at 11 o'clock from Eurozone, and then as you can see we got some data from the US during the US session. We got durable goods orders 2:30 as marked here, and this is the medium impact event. And then we got some house price index, Case-Shiller 20 city index as well, and then we got consumer confidence at 4 o'clock. So we will see how confident are consumers in the United States. We are expecting increase from 101.8 to 102.1. So that's a slight increase. I'm not quite sure how much confident can a consumer be among the pandemic in the United States, but we will see. If there is some kind of a big decrease in consumer confidence in the United States, then this will surely won't be good for American dollars. So what are we going to do with our analysis? Well, I think we should take a look at the euro to the pound, then Aussie dollar, and then gold to the American dollar because of the consumer confidence data. So let's just do these three markets today. So let's start with euro to the British pound. As you can see here, we got the channel here, right? This is our old channel. The price has broken out of this channel after the level of 61% of this Fibonacci retracement has been tested. As you can see, 0.9027, which is here. Unfortunately, there was some lower lows made as well, because this low here is definitely below the 61%. So we got a new low, but there is no follow through after the new low was made. We have a breakout above this channel, so we can just remove the lower line. We can remove the Fibonacci as well, and right now we are apparently consolidating. We are consolidating. There are some attempts to rally from the bullish side, but the level of 0.9155, which is the key technical resistance for bulls, has not been violated yet. So right now we are locked in the narrow zone between the lows of basically 90 0.07 to the level of 0.9155. So this is roughly like a 140, let's say, 5 pips. So right now this is our range. We are trading around as you can see the level of 50 in the RSI. So that's the level of neutral sentiment. So there is no improvement here. We're just bouncing up, going down around this level. So there is no clear direction on the euro to the pound. And behind us in the background is this nice jump from 0.8865 to 0.9290, but the corrective cycle has not been completed yet. So I think that we might see some kind of a upper higher levels, basically, because if once the 0.9155 is violated, then we can go really higher, like 0.9219, and maybe even test the 0.9290. This is the high from the 11th of the September 2020. But for now we are just locked and there is nothing much going on interesting, so we just skip this one. Let's go to the Aussie. What is going on here? As you can see, we got the breakout below this short-term trend line, and as you can see, we almost hit the key technical support 0.7006. So we can move our short-term support a little bit higher. The low was made around the level 0.7020. Since then we got some bounce. This bounce is not very very high as well. I think right now the main technical resistance will be around the level of intraday. Technical resistance will be around the level of 0.7152. This is for the intraday traders. This level is kind of out of date, so we can remove this one. And as you can see, we are trading just between these two levels, and still 50 and 61. 50 has been violated, but 61% of the Fibonacci retracement is still a challenge for the bulls. So if this RSI will stick below the level of 50, the neutral level, then the odds for another leg down are high, because it looks like the bulls have no strength. Even after the speeches and the recent interest rate decision, there is no strength in a bullish movement towards 50 or 60% again to violate these two levels. So Aussie looks more bearish than bullish for me, especially that we got the main wave here. This is the impulsive wave down, and this is only some kind of a correction. So please keep in mind there might be a reversal around the level of 0.7152, somewhere there. We might see some indication of a price going lower again. So that's everything for Aussie. Let's just take a look at our last chart, which will be gold. So what is going on gold? As you can see here, we broke above the trend line, but again, after this breakout, there is no follow through. We didn't even break above this level, the high from the 12th of the October, and this was 1934, wasn't broken. This looks like kind of a bullish engulfing, but this is very weak trend here, and right now gold is trading sideways. Again, it's trading sideways, so maybe some consumer data can trigger some intraday move. But look, there is some kind of a specific range here that has been established. 1883 is the low, and it will act as a technical support for the intraday traders, and 1934 is the technical resistance around this high of the from the 12th of the October, and it will act as a barrier, as a resistance for the bulls. So we are still trading sideways. Horizontal trend on the gold market, so it's not that good on the spot market as well, especially for the bulls, because when you do the breakout below, when you do the breakout above the trend line, like here we've made it on the 9th of the October, then in order to keep this momentum up, you need to follow through. You need to keep pushing towards higher levels, but I can't see anything like this happened here. So right now, traders are waiting for the trigger to break in either direction. And because you can see here, we got some, let me just zoom out. We got, of course, some kind of a nice bullish action here. We got some nice trend, but it looks like the larger time frame trend on the gold is, of course, up. But now we are in the corrective cycle. We just correct from 2075 to 1865 here. Then we have some bounce. Again, we got this sideways trend, another leg down, we got lower low, and please notice that we got lower high, lower high, lower high, lower high, and this even local high is lower. So we keep making lower highs in order to confirm the another leg down on the gold. We need to break below 1883 and then 1865, and then of course below 1848. If those three levels are violated, we can retrace 38% of the whole big uptrend that is, of course, visible on the other time frames, and this level is located at 1835. So please bear with mind that this is still a downtrend continuation, because there is no follow through after the breakout out of this trend line resistance. So doesn't look good for the bulls at all. And as you can see, the RSI show us that the market is trading around the level of 48.49, which is basically kind of a neutral, but with the tendency to to become negative sentiment very soon, right? So doesn't look good for the bulls as well. So that's my analysis of the gold. The outlook is still bearish as long as 1934 is not violated. So yeah, that's everything for me for today. Thank you very much, guys, for watching this short video analysis, and I see you guys tomorrow with a fresh new start of the trading day, and then we will do some other analysis. Thank you very much for watching this, and see you guys next time. Bye bye.